Hello everyone, welcome. As usual, every Tuesday and every Wednesday we provide some educational webinars for you. Today it's a topic that we rarely present, but had some requests, so I decided to resume this topic. Is the Forex order block. It's not something that is widely used, but it's up to each one of you basically whether it's something that it's convenient for you or whether it suits your style, let's say, the trading style. As usual, before we start the session, I will need to go through the disclaimer warning. Also, would really appreciate the feedback regarding the audio and the presentation as well. So if you're facing any issues, please let me know ASAP, and I will try to see, to check basically if it's from my end. So I would like to welcome everyone once again. Hope you will enjoy this session. Feel free to ask anything you want anytime, and I will get back to you live. Okay, so okay. Let me go through the disclaimer warning first of all. This material provides a general market communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment objective or an investment recommendation or an investment advice or solicitation, for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment leverage product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk, for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as Forex and derivatives may not be suitable for investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. So that was it. We're good to go. Just a quick reminder that this is the webinar is recorded as usual, and you're gonna receive a recording in your inbox as soon as we are done, within 24 hours basically. Webinars@hfm.com is our email address. Feel free to send any question you have, any query you have. Myself, analysis team, and support team will try to reply within the day. So that's me. For there is anyone that join us for the first time ever. So my name is Andrea. I'm a market analyst in HFM for more than 7 years now, actually nearly 8. I've been active, however, in the Forex industry before that as well. So I have 5 years long studies in UK, more precisely mathematics and physics and actuarial sciences, and I'm here to help and support our traders on becoming better day after day. Okay, so let's start. Forex order blocks, what they are, first of all, what we mean by Forex order blocks, what they represent. Basically, when it comes to trading, okay, just give me a second. Roxanne, I can't see what is in your webinar. Let me just That's weird. Roxanne, can you check whether the template that you're using is appropriate? By template, I mean, are you seeing the presenter's screen, or you're seeing who is talking, which is me again, but without there should be sorry, an option to change to multiple view options. Maybe this is the reason. Can you check for me and let me know whether you can see my screen? No, it's blank. Over here, let me switch off my screen and switch it on again. It looks fine from my end. Guys, is it any one of you from the web, logged in via web? Because Roxanne is facing an issue. It's fine, it's fine. Dear, it seems that it's for your end. Maybe, I don't know. I don't believe that's a low internet connection. But Rodero and Bethel are also logged in via web, and it's okay from them. Guys, can you advise which option, how Roxanne can enable the appropriate setup in order to be able to view my screen? There is I believe there should be several options on whether you want to see all the participants or just the presentation or who is talking, etc. Roxanne, can you play a bit with the options and let me know whether you can see my screen? Mia is suggesting that yeah, so you can see the presentation, right? Just the presentation. Yeah, this is what I'm sharing right now, just the presentation, the slides. I'm not sharing anything else for the time being. So if you can see that, we're good to go. Thank you very much, everyone, for your support. So sorry for that. Okay, let's get back. You're welcome, Roxanne. You're welcome. So Forex order blocks. Okay. So basically, guys, in trading, okay, when it comes to in trading, an order block is a price level, okay, where we are seeing multiple market participants either want to buy or sell, okay. An order block indicates, or may indicate, to be more precise, that the price is likely to fluctuate. Why is that? This is the reason behind that is that there is a lot of pressure either from buyers or sellers, whether it rises or falls, depends on where that pressure is coming from. So we could claim that it presents a key support and resistance levels. Actually, order blocks can be used to identify also support and resistance levels and potential breakouts, but as such, they are the price levels where the institutional players, the big players, attempt to buy or sell an asset without potentially having too much of an impact on the pair's price. So what I'm trying to do, just to simplify a bit, this is not necessarily an area that was retested several times in the past, is not necessarily historical strong level, okay, but is a level, a price level, a price area where we are seeing other than the majority of the market participants, significantly the institutional players, okay, the institutional players to put some kind of a pressure, either to boost it to the upside or either to boost it to the push it on the downside. Okay, just to clarify something, okay? Order blocks, because I mentioned several times in this sentence the fact that it's an area where institutions attempt to buy or sell. Okay, so it's not like retail retail traders like you guys. It's the big players, institutions, banks, hedge funds, and etc. That's why we are seeing that block trades are often made outside of open markets. Okay, so sorry for that. So it's an agreed price, okay, between two parties, in this case the markets and the institution, but outside the open markets. So it's not an area that can help you predict the future or something, okay? It's an area, it's a level that you can use as a base, okay, in order to do extra research and based on that to take any future decision regarding trading that area, participating in a potential pullback or in a potential rebound. So just to okay, before we move on, I would like to focus a bit on the significance of order block, not in general in the market, but more precisely in the foreign exchange, in the Forex market, because I believe this is what you want to find out exactly, right? So an order level in the Forex market, as I mentioned, takes place. So I have a small one illustration over here. An order level in the Forex market takes place when institutions, like I said, banks or someone equivalent that obviously trades millions, is when they want to place a large order, and they are doing that usually outside the open markets, also known as dark pools. However, because the institution, this kind of bank, institutional player, etc., does not wish to destabilize the market, okay, it will cut the order into chunks or blocks. So we'll do it partially outside the open market, but partially. Will not like open a 5 billion or 5 million single entry, because okay, it's no one wants to destabilize the market, right? Not even them. So they usually actually what they do is they cut the order into chunks or blocks until they have reached their target. So the idea is to make sure that the institution, the bank, can get hold of the money it wants without disrupting the market, by either making things too expensive or too cheap. So this is what's going on in the institutional players' perspective, let's say. Okay. Sorry. Okay. So order blocks, guys, these areas are important because simply because you know that Forex trading, okay, is often carried out by all these big players, not us as retail sellers, the big traders that trade millions. We're just a tiny percentage of the market. So I think that's clear, right? Forex trading is often carried out by large institutions. So there may be often be situations where a stock market player sets up a particular high or low point to use like a trading barrier, either support and resistance. So so you, from your side as a trader, you can, based on these support and resistance levels, that is barrier, let's say, that are placed and often used many times by the big market players, you can identify easily these levels, these support and resistance levels, by looking at the price chart for a specific time period, okay, and see the low levels where the price went upwards and the high levels where at which the price fall. So peaks and bottoms, repeated ones. On the other hand, as I mentioned earlier, an order block cannot necessarily be ascertained purely by looking at a price chart. For the reason that I mentioned earlier, is not necessarily a historical price movement. So if I go, let me just put okay, in this case you can see that it used to be a resistance area back here as well, but it doesn't necessarily mean that it used to be an old support level and now it's a resistance area, or it used to be a resistance area for 3 years in a row or something. It's not necessarily a price movement, okay? But so what you need to do is focus on the current interest, on the current market interest, on the current activity of that particular order block that you might spot it. We're gonna see examples, so don't worry about it. So let's get back. Let's get back. So as I said, who is involved in block trade? Asset management, individual investors. But before we just to explain a bit more, okay, as I said, a block, an order block, otherwise you might seen it as a block trade, also known as block trade, is all these private negotiations, large negotiations that the institutional players have carried out, or hedge funds, and this is usually done by an investment bank as well, okay? So it's something that is away from the public, okay? It's not something that you can really see publicly. But just to show what it represents in a matter of money, okay, in a matter of dollars, have in mind that the block trade, okay, is basically involving at least, this is what at least 10,000 shares of stock, or one worth more than 200,000 worth of bonds. Okay, the majority of block trades placed by these people, they are greater than these numbers that I show, but this is the definition based on the New York Stock Exchange or in the Nasdaq Stock Exchange. An order block requires more than 10,000 shares of stock or 200,000 dollars worth. Okay. Are we okay so far? I'm gonna give a quick example, verbal one, just to make sure that you understand the terminology. But imagine that, okay, Roxanne in this place, Roxanne owns a hedge fund, let's say, and you want to sell 100,000 shares of a company. The current value, let's say, of the, let me draw it just to see the numbers. Let me write down the numbers, okay? So let's assume that you want to sell 10,000 shares, okay? Sorry. And the current price right now is $10. Okay, $10. So basically, what this worth? Can someone tell me? Basically, this worth $1 million. Okay, on a company that may only be worth a few hundred million. So the sale will probably push down the price significantly because it's worth $1 million. So we're gonna see a significant decline if this is entered as a single market order. So this will cause instability in the market. Okay. So this might end up, if this occurs, if a single market order occurs, okay, it will be, it will present a progressive worsening in the prices. We might either see slippage, okay, everyone will get panic, will start shortening it, okay, and that's why even the big players prefer to cut such a big order into multiple transactions in order to avoid instability. Okay, so that's pretty much it. I'm gonna leave it for now because yeah, so I'm gonna keep it as simple as that. Yeah, it's gonna cause slippage, dear Mia. So basically, Mia, in simple terms, okay, very simple terms, areas that present blocks, and we're gonna explain in a bit how you can spot a block, but these kind of areas, this kind of the order blocks, okay, they are liquidity zones. Basically, they present areas of high liquidity in the market. So this means, yes, there is a high liquidity in the order block because simply an order block is created if there was a large number of orders executed within this block, indicating a significant trading activity. So So I would like, before we just to finish the theory, guys, just to show you the very latest daily market, the daily market summary from Nasdaq. Basically, the summary, as I said here, representing from all trading volumes on Nasdaq, okay? And it shows you, okay, someone understand? Okay, great. Okay, so this is the latest one. Actually, I should post it also the 2nd of April because it has been it has been announced as well. But feel free to visit Nasdaq daily market summary. They updated their table day after day, presenting the total volume in the trading, in basically Nasdaq, okay, and also dollarized. How much does it worth, and how many block trades and etc. Let me check some questions that I already have. So basically, what this shows, okay, is the order blocks that have been placed per trade per day, sorry, and how much they worth. Okay, just to understand how huge. Look at these numbers. How huge the market is, and the volume and the money traded day after day. Okay, over here we have 246, is it trillions? I cannot, it's billions, sorry, billions, millions, billions, yes. Just on Monday was the volume in dollars. It was the volume and how much it worth, with a 36 block trades being placed. So let's move on. I'm gonna get on the advantage later on, but let's firstly understand how we can identify an order block and what it means for you as traders. Okay, there are many techniques that you could utilize if you are interested in learning how to identify an order block. You should firstly, you might look for clusters of price candles indicating that there is a significant level of buying or selling activity at that level. You can check the volume as well. Remember what I showed you earlier with the Nasdaq. Check the volume of the trades around in the market, and basically around that price level. So there are in MT4, MT5, there are volume indicators as well. So you can check also the volume of trades around that particular price level. If you see a large volume of trades, okay, that could be an indication that this might be an order block. So let me just get back to the let me clear a bit. I want just a plain. Okay, so if I enable, let me just, sorry for that. Where is my market watch? Here it is. So you can either enable the volume Did I enable? Yes, I did. Ideally, I personally prefer the actual indicator. Here it is. Here we are. I don't know if it looks, in my eyes, it looks much more convenient, but that's up to you. There are also other tools that you can spot the volumes. But yes, if there is the very first thing that you need to check is your actual price, right? Your actual candles, and whether there is a significant buying going on. So for example, over here is a 1 hour chart. I can see that I have some rising highs, so higher highs, sorry, a bit of a higher low in my fractals over here. Come on. Let me just put some trend lines on. I'll get rid of the moving averages just to make this chart a bit clearer, simpler. Here we are. So I can see that there is some kind of a buying intraday. Okay, I'm in 1 hour chart. Okay, as I said, you must based on what you need, you must focus on a single time frame. Okay, so I've seen some kind of a rising buying pressure. Also, that started, okay, yeah, that started on this rebound, let's say, and there is a growing increasing volume as well. But so that might also might be an order block, but just to be more precise, okay, I need to remember that an order block, okay, so that's an indication. We cannot really tell whether it's an order block or not yet. So one way is to check your candles. You can combine it with the volume. If there is a large volume of trades at a particular level, it could indicate an order block. And this rising over here bars, the rising bars over here today, okay, it gives me the impression that something's going on around that might be an order block. Okay, otherwise you can look for consolidation or ranging, this is the case basically. If I just emphasize on today's trading, yes, there is a bit of a sideways movement. It's a bit stuck between 125.60 and 125.80 territory. Or you can use your usual RSI, MACD, Bollinger Band areas, up to you. Just spot if there is an area that it looks that either with patterns of consolidation, either with the volume, either because it's consolidating, it triggers your attention, put a note like I did. I put this yellow rectangle. Now, what you can also do is check the news to see whether there is any news that it could trigger an order block. It could push traders to adjust their positions. Okay? Basically, in simple terms, any consolidation zone, any breakout zone, any pullback zone, any reversal zone, these are considered to be examples of order blocks. So this one, nice one, consolidation, but also a bottom and then a reversal zone as well. You see, after a bottom over here, consolidated and reversed. So this is an order block. What else? There is another order block example over here. Not really. You see, this is combined also with the rise in volume. Can you see this, guys? It helps to connect the peaks of the volume as well. So any consolidation zones where the price is more or less stagnant, like here, these are areas that eventually could be proven as order blocks because they created a support zone or breakout zones such as let me just try to find one, otherwise I'm gonna actually let me get back to my PowerPoint, and this is actual this is an example of a breakout zone. Okay, it was in a rise in this asset, the Amazon more precisely. Amazon was in an upwards trajectory, but it stuck at some point for okay, this is a long-term chart, so it stuck for a few months in the same zone until eventually it broke it and continued its upwards trajectory. So this is a breakout zone, which is an order block. Okay, order block can also form at breakout zones, areas of map where the price has breakout consolidation zone, and this is a breakout, right? And it's on the upside, it's a breakout on the upside. So this was an order block, you see, with it seems that the institutional players by seeing how long this lasted, that lasted nearly nearly a year, it seems that they probably had placed a lot of trades, but splitting them in many weeks, weekly purchases, weekly purchases, let's say. So okay, I think we might have actually covered that already without presenting the actual slide. So I'm gonna move on. And before we start the examples and how you can spot order blocks, very quickly, a quick reminder on how many actually the turnover per day, more than 7.5 trillion dollars per day are traded in the market. I know this is a sample of 2022, but it still holds. And have in mind that the majority involves dollar trades. Okay, so it's just an indication. It's just an indication on how much money are traded a day and why. And the significance of Nasdaq table that I shared earlier, okay, which presents how many daily block trades are placed by the institutional players a day and how much they worth. Okay, so okay, hope I can see some questions. Rodero, actually order block is usually outside market hours. No, we're not gonna see it as a market gap. okay? Not necessarily, at least, and not always, because remember that they aim not to destabilize the market. So they chopped it into smaller trades. So yeah, it's not necessarily the case, okay? So here you cannot see a gap. Here you can see a small gap at the beginning of the order block, but that's not necessarily the case, okay? But I want you to have in mind that when you are analyzing a chart, if something triggers your attention, such as consolidation or the inability of an asset to break a significant level, either to the downside, either to the upside, along with a sharp increase in volume, that might indicate an order block, that might indicate a surge of buying interest, let's say, if it's to the upside, resulting in a formation of an order block. So basically, what you are looking for, you are looking for a price action to be temporarily paused, okay, before continuing on the same direction. So these, and more precisely, these should confirm you the breakout of the order block created. The majority of traders, okay, pay attention to this kind of order blocks in order to use them not for entry levels, but to use them as a support and resistance levels in the future. So, for example, if the price retreats back to the order block, like in the example, sorry, just to find an example like that, like in this example here. So it was an order block. Here it returned to the, you see, here it returned to the, to the order block. Here it also returned to a previous order block. So if the majority of the traders, at least not all, they find these order blocks not in order to participate into the trend or to take an entry. They might take an entry indeed, but they also put notes, highlight the order blocks in order to use them in the future for support and resistance. So like in these examples, if the price retreats back to the order block level, what that means, can anyone tell me? Very similar concept with the actual support and resistance levels. What it means if it returns to a key support level, for example. Supply more order blocks, it will bounce. Very well done. Very, very well done. It's demand. Yes, you corrected it, Maya. Yes, thank you for correcting. Yes, the fact that it returns to an order block that was observed in the past will attract buyers because they might miss the initial move, because for many reasons, but mainly it will attract buyers, usually because they consider that the asset is unable to break that level and will rebound. So the return into order blocks attracts, in this case, this example attracts buyers, okay? And that leads to a rebound. You see, the very next day, as you can see over here, it took a while, but eventually rebounded. And while on the flip side, it was an order block a pullback away from a previous order block, that will attract sellers. But in this example, it lead to a bounce. It lead to it attracts buyers. So you can use order blocks, okay? Put a note on them, not to find an entry, but to but you how can I say that? But in order to help you in the future, okay, to find potential areas of interest for entering the trade or setting a stop loss or determining a profit target, okay? Obviously, as every single other strategy, make sure that you combine it with technical indicators, either volume that I showed earlier, either you might spot a pattern. Okay, I cannot see a pattern over here, but I cannot see like an evening star or hidden shoulder or something, but you can combine it with your usual setup, with your usual technical analysis. Okay, don't be afraid to adjust it in your usual technical analysis. So remember that the order blocks are subjectives. Okay, I cannot tell you, this is an order block and this is an order. It depends on in each one of you perspective and time frame. Okay, I am a person that only interested in long-term trading and day trading, so I have spotted in my weekly chart an order block here, an order block here, an order block here. It's not necessarily something that Zoran will see in his 4-hour chart or daily chart, or Rodero will see in his from his own perspective. Okay, it is subjective. That's why it cannot be used for entry level, but it can use as a potential area of interest. It can be used for entering trade, right? But something that you have previously seen and might repeated like here, and etc. So it's a comprehensive trading strategy. So there are some steps that you need to consider. You need to consider identifying order blocks, first of all, right? Okay, here we are. Okay, and put a note. This looks to be an order block. This looks to be an order block. This looks to be an order block. So look for areas where the price has shown signs of consolidation. Second, use your technical indicators, okay? Or trend lines or moving average, or anything, just to validate the order block or volume, as we said. Now, check the overall market sentiment, okay, in order to determine whether the trade is in the direction of the order block or against it. So go one way to determine the market bias is go higher. I mean, in a higher time frame, to see what's the overall trend. Is it in an upwards movement? Is it in a downwards movement? Is it just an intraday consolidation, and so on? Plan your entry. Wait for the confirmation of the order block, such as, actually not on the confirmation of the order block, wait for a breakout or a pullback. So what I mean here, the fact that it was broken and extended higher, these two candles are confirmations in order to plan your entry if you haven't done it already. The bottom of the order block or slightly below it, it could be used as a stop loss level. Yeah, so, and last but not least, manage your trade, monitor price action and adjust your stop loss and take profit as the trade progress, maybe by setting some trailing stop losses and etc. So it helps. I mean, it might look like a usual I don't know, support and resistance analysis, etc. But the significant about the important, basically about the order block, is that there are levels of significant importance for the future, like what we show here. Okay, what we show here. Remember, because there are levels that you need to keep into your charts because you might use them in the near or long-term future. They represent areas of high liquidity in the market. Remember that. There are areas that a large number of orders were executed, that there is a significant trading activity. So it gives you insights into where market participants have placed their orders. By revisit, let's say, these areas, that implies to a potential rebound. And they can help you with your decision-making point as well. So let's move on. So you see, yeah, order flows, indeed, proven, and it jump higher. Proven, jump higher. Proven, jump even higher. Can you see how significant and big the move is with consecutive bullish candles, consecutive bullish candles. I mean, order blocks is not just an area of support or resistance. The breakout of them indicates that we're gonna have a trend for a while. So here, remember that this is not a short period, by the way, okay? This is not a short period. We are for weeks, okay? So you can basically spot, let's say you are, you might have spotted in a weekly chart here in gold and block, and you can go down to the daily chart to spot a potential entry or to check whether there is still time to participate in the existing trend after the breakout, I mean. What else? Here it used to be, you see over here as well. So, okay, I don't have it. Okay, it's a shame. Never mind. This is again, so we are on the same example, okay? Same example. In this, over here in this area, basically, that it used to be, we used to spot an order block in April, and we noticed that it revisited in between January to March. How it can help you as a day trader or intraday trader by having this node back, but you might have put the node back in April. That's why you shouldn't, you should never delete from your chart all areas that you have spotted, order block, support levels, etc. Because once it revisits it, it's like you have done your homework in advance. So if I go down to the 4 hour, okay, I can see several retesting that area. Or if I go down to the here it is. Okay, this is the 4 hour chart back when it revisited. Here it is. Oh, sorry. Sorry for that. Back when it revisited, here it is. That old order block. However, the alert came halfway with the previous order block in a 4 hour chart, rise, sharp decline, and consolidated at that area for a while until it broke it. So the breakout of this intraday 4 hour previous block could have triggered an entry point here with target your very previous past order block, the one that you have spotted. Okay, so it's a way to show you that you can use it even intraday. The same mentality could be could be applied intraday. It's not necessary for the long term. Find order blocks in your 1 hour chart. Put a note. Check. Is it it has break it? Yes, it did. Okay, that could open a long position. It will quickly revert back, but that's fine because it holds above it. It's actually halfway. So that's okay. That indicates that the upwards trajectory, the upwards trend will continue. You have spotted another order block on this long trend. Put a note because if it revisits, what that means that on the breakout of this retest, you can open a short entry with the target being on the previous block. Clear? Basically, this is it, guys. Okay, this is it. Simple as that. Okay, if this entry wasn't, you weren't confident enough to put an entry over here, that's an alternative entry point as well. Okay, or that one doesn't mean that you have lost the chance or something. Because there is still a lot of room until it breached the previous order block. Guys, that's pretty much it for the day. Basically, it's very simple. I mean, it's not like a very difficult topic. Okay, so you're absolutely fine, Koena. Kehla, sorry. You are saying that, as you said, they don't want to disturb the market by entering one time, but they always come back for a chunk of order by installments. Yes, and yes, this is usually the case. Actually, it's always the case. There were some exceptions in the past, but it's not of anyone's interest or benefit on destabilizing the whole market, because this will cause panic for everyone: institutions, trade and retail sellers, hedge funds, banks. It will cause instability in currencies value or assets, the assets of gold, etc. So that's why it's split. It might also affect their liquidity. That's why they are preferred to chop it down. Guys, that's pretty much it. I know it's a very theoretical and very simple webinar, but hopefully that give you like a different perspective of how you could spot levels of interest and benefit on the future from them. Any questions are more than welcome. I'm afraid there are just 5 minutes left to close the session, but simple as that. Yes, this was the aim today, dear Maya. But anything you need, send it to me via webinars@hfm.com. I will reply on spot. Maybe you want to, you have spotted some order blocks, you want to take a screenshot and you want to see whether everything is appropriate or whatever. Anything you need, we're here to help. Just send us a screenshots. It always helps. Can I trade over 100 lots on a single account at the same time? It depends on the asset, but this is huge, my dear friend. I don't know your balance, I don't know, but I believe that you can. Yes, I don't remember that there is any restriction, but that's a huge amount of money. Make sure, actually, it's too big. Are you sure you can afford this kind of big position? Always don't trade more than you can afford. Don't risk your full amount, your full equity. You never received a recording in your email. Casino, Barak, can you check your spams? Spam folder, junk folder? That shouldn't be the case. In any case, though, everything is on the web and the YouTube channel. Okay, the YouTube channel in the playlist called webinars. No, Daniel, it's reversal and consolidation areas. No, I'm afraid not. You see, repeated lows and highs, repeated lows and highs. It's not a mistake if you put it on the tail or if you want to put it on the body of the candle. Ideally, order block should be spotted based on the body, on the open and close price, not the tails. But yes, are areas of consolidation. If they were, yeah, so it's, yeah. Okay, I'm going to call it a date. Thank you very much. I would like to remind you that it's an NFP week. I'm going to host an NFP live in our YouTube, LinkedIn, Twitter account, Facebook account live. Feel free to join me to ask anything you want. Hopefully, we're going to see something good coming out. And not further uncertainty around the US economy. How to spot valid order blocks, areas of consolidation. Okay, this is it. Areas of consolidation in combination with rising volume on that particular period years ago. Okay, guys, I need to call it a day. Any further questions, please send it. Check my examples and send it to me via email. Thank you very much for attending. Hope you're having a great day ahead. And I'll see you again on Thursday in an NFP Live. Bye-bye.